In this session, we will look into two ways you can open an Iron Condor option strategy. So, if you are interested in option selling, Iron Condor is one of the very popular option strategy, and there are different ways you can open Iron Condor, and we covered this in previous sessions. In this session, we will look into the two ways you can open the Iron Condor. So, before that, before going into the two strategies for opening Iron Condor, let's look at what is an Iron Condor and when do we open Iron Condor. So in the screen, what you see is, let's say, this is how the price action or the price change for your favorite stock. Let's say Apple. So the price is going up, going down, and touch bottom line, bottom price area. Let's say 160, and it again price in the top it's touching, let's say, 200, and it goes up, goes down, and now it's somewhere here. Yeah, and now you want to enter into Iron Condor option strategy, or let's say you want to enter into an option strategy. Now if you look at this graph, how the price change, you see that the price is always between these two borders. People call it support in the bottom, and in the top resistance. So this is also covered in my one of my previous videos on graph analysis. You can look into the video. I have provided the link in the top right corner. um, so in a situation like this, where price is not really going up for a long time or really not going down, you can enter into a Iron Condor option strategy. Meaning here, as an option seller, your position is, or your view of this, like, Apple stock is, price will be between these two range within the next, let's say, one week. So this is your view of the market. So first, before you enter an option strategy, you need to have a view of the market. Mhm. And your view is the price will be within this range. So this is your view, and now you want to enter an option strategy, option selling strategy. And in these type of situations where price is not in a trending but it is within some range, people enter into Iron Condor option strategy. The second um, situation where people enter Iron Condor is when the trend is not really clear. So let's say the price is here, and now price has gone up, price has gone down. Now you are here. So now you have only seen one time that the price has gone up. So you are not really sure whether the price is going to go down or price is going to go up, and your time scale is 1 week. You don't want to keep the option for a longer time. So here you don't really know what to do. I mean, you don't have a clear view of the market, of the price action. So here in these situations also you can enter into Iron Condor. So this means that you will sell. When you sell a option, you mark it as -1. So you sell an option at this level, and you sell an option, or a little bit, actually it's always better to do this a little away from this border. You sell an option at this level, sometime somewhere here, and you sell an option at this level. One, okay, here also -1. I only wrote a minus before, now it's clear, it's -1. And you buy an option somewhere here, so +1. This is to hedge your risk. So when you buy an option, it will be +1. Sorry, this your equal to is messed up here. Okay, here you have, you take a, here you buy an option +1. This is how you enter an Iron Condor. I will show it in a real scenario in live situation also. But just to give you an idea, when do we enter iron condor and how do you select the strike? This is all covered in a different video on graph analysis as well as on setting up the iron condor option strategy videos. Please check in the link in the top right corner. Okay, so now we know when to enter iron condor, and now we look into the real uh, live scenario. So this is what you see here is an Apple stock, 15 minutes time scale, and now if you zoom in, you see this is the dynamics. So price is going up and down. Now we first thing we need to do is we are going to do enter iron condor using support resistance level strategy, meaning you are selecting the strikes where to enter, where to sell the lower and upper strikes, the put and the call side based on support and resistance level. If you do not know how to select the different strategy for selecting strikes for iron condor, I have another video on this. Please check that on the top right corner. Um, Here now, just for this example, I'm going to show you using the strategy for iron condor using the support and resistance. Support and resistance, here we are going to do a support level, and here we are going to um, draw a resistance level. Let's say here. Okay, so this is 175 and 169. So this is our range. So our prediction is in the next 1 week, price will be between this range. Now we go into the option chain. So if you do not know why the different tabs here, there is also another video that I created how to set up interactive brokers for option trading. So if you are using a different platform, you can set it up in a similar way. But I use all these examples that I am showing is using interactive brokers, highly recommended brokerage platform. There is also a link, a reference link there for interactive brokers. If you have not yet opened an account in a brokerage firm, try this interactive brokers. It's there throughout the world, well respected brokerage firm. Check out the link in the description under the video. So this is interactive brokers. Now we see what we see is the option chain. So today is 2nd of May. Now we want to keep this option for around 1 week. So let's say, so this is 2nd of May. We will keep it until 10th of May. So we will look for an option that is until 10th of May, expiring on 10th of May for Apple. So Apple 10th of May expiring. Okay, so now our range is 169 and 175. But now we need to go a little below 169. That would be 167, for example. And you look at the delta 32, it's a little too much, but still we go a bit aggressive here. So here as you see, our lower border is 169. So I took a little below that, 165. We sold one option, that is what we see as a red line here, and then we bought an option just below this. And in the upper range is 175. So here you look at delta. This is a little too much, too high delta. We go a little below that. Usually people take around 15 delta, but here we are going into an option strategy, iron condor strategy based on the support resistance level. That's why we got at 30, because we don't look at the delta here. We are looking just at the strike level, at the price range level. So it's fine. So here also we sold one option at 177.5 and bought an option above this, the call. So here what we see here is in this option strategy, in this iron condor strategy, what we are going to do is we are going to build the iron condor together as a combo called combo, meaning we have the call side as well as the put side all in one one request. So we have one call, we sold one call, we bought one call to hedge the risk, we sold one put and bought one put to hedge the risk. So we are going to sell this together, and let's say we just to show you, we let's say we go at a range between these two. So you see the price range. Ask is 1.28, bid is 1.42. We take something, let's say 130, 130, and then you submit here. You see in the right side in the orders tab, you see that it is still there. We go a little bit aggressive.
Order filled.
Okay, so order is filled. Iron Condor for Apple. What does this mean? So we have both the put side and the call side all together in this Iron Condor. Now let's go to this portfolio tab, and there you can see, look at the portfolio. So one that we bought just now is this Apple, expiring, no, here. This is one that we just bought, expiring on May 10th. Apple 165, 175.5, 177.5, 180, Iron Condor. You see here. So this is what we bought. This is our portfolio, and now we can see how the price change and how what is our market value of our position, the price that we bought, what is the P&L for this, and so on. Now this is one way to enter Iron Condor. The second way to enter Iron Condor is you select the strikes, select both legs separately. So here, for what I meant by this is we select 175 here, we sold 175.5 the put side, and we bought 165.5 to hedge the risk, and then you um, buy this, or you buy this credit spread. Okay, so here you see we go a little bit aggressive here. No, did not get filled.
Order filled.
Okay, so this means we now sold the put side. Now we also need the call side. So we took 179 before, we also take 179 here. So we sold and again we bought, and now we are again going to maybe 60.
Order filled.
Okay, so now we go here. If we go to the portfolio tab, we can see a two legs for Apple. So Apple expiring 10th. So we have a bull put. This is the put side, and we have a bear call. So we have two legs. We open these two positions separately for Iron Condor for Apple. Here, when you see, look at here, this is Iron Condor. We did it together. The put side and the call side all in one single position. Here we have two positions here, one for bull put and one for bear call. So basically, you have two credit spreads on both sides. And now you may ask, so what is the difference, and why do we do it separately? So there are multiple reasons. So here in this case, if you want to close the Iron Condor very fast, the whole thing, it's very easy. This can close it as one go. Now, sometime what happens in very often is So you see the price. This is the live market, Apple Apple Live. So you see the price changing here. So here, imagine the price is going up and up, up and up, going to close to 179. The call side. So that means our call side is getting threatened because it's going to that side. Now our put side is free. This means now we need to manage the risk in the call side. So in order to manage the risk, there are different ways to do that. I have another video on this topic, how to manage risk in iron condors. Um, Check out my videos, you'll find it. Now, in order to manage this risk, if you're doing this all together in one go, like iron condor here, it is little difficult. This is point number one. So if you do this all iron condor together, it's a little difficult to manage the risk, because what happens is, in this, if you look at here, you can see the different legs. And if you close, let's say, the call side, and it's, for example, it's going up and up, and we need to close the top side before to reduce our loss. What happens is, at least in the interactive brokers, it's you can close the positions, but it's kind of difficult. If you look at the other option of entering iron condor separately at the call side and the put side, if the call is getting threatened, you can close this position, or you can move this position, you can move to a different date. You can roll over this position, it's called the rollover, moving to a different date, expiry date. And so there are different ways you can manage the risk when you open it separately. But on the other hand, if you want to close the whole position and one go very easily, this is a better one. But to manage risk and to deal with it properly, easily, and without an error, stupid system errors, um, my recommendation is to go to open these iron quarters as two separate legs: bull side, put side, and the call side. So as you see here, the daily P&L for call side is -2, the put side is -4. So this looks like the price is going down. Yeah, you see here, price is going down, and that is why here you see in the portfolio, uh, yeah, the put side, it is the daily P&L is -4, and the call side it's a little less. So I hope you understood how to the two ways you can open iron condor, and hopefully you learned something new. If you like it, please provide a thumbs up in the video, below the video, or and also subscribe to the video if you want to see the new videos that I will be publishing on this topic. See you in the next video.